Oh, hi, good morning. This is Renju, your Calgary area realtor. Today I'm here with a very special guest, Mr. Biju Matthew. He's a mortgage specialist with Scotiabank. Before he used to work in a very senior position with ATB, CABC. So he has more than 2 decades of experience in banking industry. Right now he's with Scotiabank, specializing in residential mortgages. So it is an honor that we are having Biju here. And I would like to ask some questions because every time a lot of my clients is asking, hey, what is going with the banking industry? How will be the mortgages, interest rate? There are too much uncertainties going in market with tariffs and too many global influences. So we would like to hear from the expert directly what is going to be happening in today's market with interest rates and everything. So, Biju, thank you so much for coming, and I welcome to this podcast. And yeah, you can now. It's your turn to start.
Okay. Thank you. Thank you, Renchu, for giving me this opportunity.
Second.
Basically, we do have a long time relationship in different field. We are working together. And this is one of the opportunity we can sit together and discuss. Of course, as you mentioned, I'm representing Scotiabank at this moment. I came from a financial background last 20 years in Canada. I had different positions in multiple organizations. So I'm happy to be here. Thank you for this opportunity.
Yeah, so I think since we are having some time constraints, I would like to shoot with some basic concerns that people might be allowed to hear. See how these tariffs will be influencing Bank of Canada or their policies going forward in this year. Can you able to give us some or shed some light on that one?
See, at this moment, if you look into the home financing or residential real estate market, it is very lots of uncertainties are going on because of the rate fluctuations and Bank of Canada's unpredicted rate cuts and rate stability. What they are looking at for based on the inflation. Definitely for the people one who are planning to buy, especially for the first time home buyers, I see there is a forecast of market is going to be much better in the coming months and maybe half year of the 2026. Rate,
Sorry, for the rate for the buyers that you mean?
yeah, I mean to say the
Oh,
rates,
okay.
the Bank of Canada rates are going down, and we don't know what is the next announcement when it's going to come. What is going to be that? But at the same time, if you're looking at the because you are a real estate broker agent, so you know the market very well now. The prices are going down as well for the properties in Calgary, especially. So this is the right time for the people to look for their dream home at this moment. Of course, the financial institutions are there to support your search and your financial needs.
So, do you feel that there will be a significant drop in interest rate this year? Maybe another couple of bits this year from Bank of Canada?
I don't see there is a very big significant rate cut going to happen soon, but the stability you can see maybe I expect maybe in another by mid of the year maybe another quarter points may be reduced.
There is one date, March 21st. There is another date
Yes,
by Bank of
that's the
Canada.
next announcement for the rates by Bank of Canada.
I have seen that from December to January, the inflation came down to from 2.4 to 2.3. So, um, uh, do you still feel that March 21 we can expect some good news, or it has to be towards the mid of this year?
I see there is some changes can be happen only in the mid of the year because currently the inflation rates are as expected by Bank of Canada. So there is no particular reason I see maybe in March 21st rate announcement there will be some reductions. I don't see that. Maybe I see that by mid of the year you will see some rate cuts.
Would you like to share something about the bonds, where I think usually bonds impact the fixed rates, like the 3 year, 5 year fixed rates and everything. So, do you feel that bonds is going to bring any changes? Do you see some changes is going to happen in the federal bonds?
See, there is multiple external factors are also affected, especially um, North American market, United States of America is a big part of playing this game. So the bond rates are directly influencing the rates of the lending market over here, especially for the home financing. So this is definitely based on the bond rate changes. So we are at this moment, we are not into a position that we can predict at this moment, because the new tariffs, the rate changes, and Trump's new laws, and every time it's keep on changing. So that's giving us an uncertainty, and we are unable to predict at this moment what is going to happen.
So pretty much the same status quo will maintain at least for this year.
That's what I see there.
So we cannot expect any bigger magics in terms of numbers or interest rates or anything.
Not maybe at this moment, especially when I look into the March 21st rate announcement, I don't see there is any big changes going to happen. But in coming months, in the next before mid of the year, you will see some cuts. That's what my expectation is.
Yeah, so my general kind of pilot topics are done. So I think I'm more going to shoot with Scotia.
Okay.
So just comes to Scotia, can you able to give us at least couple of uniqueness, specialities when we compare with the other major lenders, like the other major chartered banks? So can you give us some unique products?
Of course, as you know that I worked with the many major big fives in Canada. I worked with RBC, CIBC, and also the last I was with ATB. Now I'm in part with Scotia. So there is some advantages. What I see is Scotia is offering the varieties of mortgage products which suits or tailor-made for the client's requirements. So that is one of the most attractive point what I can see compared to all other big fives, or that ATB. When I worked with them, there is some restrictions on that. They are only able to lend for the people only in Alberta. So this Scotiabank, when you look into that, this is a Canadian bank. So any province out of Alberta also, you will be able to extend your lending products. And especially when it comes for the people's requirements and their needs, there is a tailor-made products available. Like we do have something called the Mortgage Plus program.
Oh, okay.
So the Mortgage Plus program is basically it's a bundled where you can get other Scotiabank products, so your rates will be adjusted accordingly.
Oh, can you just tell me what are the other products that you can club with?
So that can credit card or investment products or bank accounts and everything. So based on that, your rates can be varied. So you will be able to get a better rate based on the relationship what you established with Scotiabank.
What is the term that you call for that?
It's called Mortgage Plus program.
Mortgage Plus.
Yeah. So when you look into the rates, most of the banks offer there is a straight rate or some discounts they applied. But when it comes to Scotia, the Mortgage Plus program is one of the biggest advantage for the clients, one who want to keep a primary relationship with the bank. So you will be able to get a better rate, better suitable programs.
Sorry, so something like a checking account, a car loan, a credit card,
insurance.
Oh, okay. So if you club with the mortgage, then you will have some upper hand in terms of negotiating for a better rate. Okay.
You are right.
Okay, got it.
The other product which I can think of is, we call it STEP, that is Scotia Total Equity Plan. So that you can a kind of line of credit attached to that. But advantage and the beauty of this product is you can split that into multiple products.
Oh, okay.
So you can have 100,000 variable rate option, as well as 100,000 you can put it as a fixed one, and also you can attach a line of credit to that.
So that only goes along with the mortgage.
That goes with.
It's not a standalone product, but it goes with
it goes with the mortgage.
Okay.
But you can have avail up to 80% of the loan to value.
Oh, okay. Yeah, perfect.
So the property value of 80% you can attach to that step.
So someone is going with like they say, like some of my customers say, oh, I only need to go with a 50% mortgage. Then the remaining 30% they can still make it available.
Yeah.
Okay.
Yeah.
Yeah,
Yeah,
I got it.
that's one of the wonderful option you can avail. Some other banks are also offering, but this one has you have the freedom and flexibility to split it into different portions,
Okay.
and then accordingly, maybe you do have a plan. Okay, I'm planning to pay off $100,000 this end of this year. You are expecting some money to come from some source, so you do have that privilege without having a huge chunk of penalty you are paying. So this step, the equity program that helps you to make a tailor-made mortgage product for you.
So it is called STEP, STEP.
STP, that is Scotia Total Equity Plan.
Oh, okay. That's good.
Yeah.
Now it comes to first-time home buyers. So, do you have some special program for the first-time home buyers? Like, other than the other major fives offer, Scotia have some unique products?
So the first-time homebuyers program is almost same like any other bank offer. That's the same with the Scotia as well, or same other mortgage products. But when it comes to the newcomers, like the newcomers, one who are in work permit or they just recently landed to Canada, so those kind of people, we do have an option called Star Right program for newcomers.
Ah, okay.
The Star Right program is designed for the temporary residents, newcomers, immigrants,
Work permit holders as
work
well.
permit holders,
Oh, okay.
and with the flexible terms and mortgages options without having a long Canadian credit history. Because
Okay.
most of the time, the people when who come new to Canada, this is the biggest struggle they face establishing the credit history. So there is some options available through this Star Right program for the newcomers.
So, how many months minimum they have to be here
Um,
as a newcomer title?
if it depends from which part of the world they are coming to Canada. So at least we are looking at around 6 months, or their what is their job situation after they landed over here as a temporary work permit holder, or how many years they are going to continue here, or based on the work permit validity. All those factors will be considered for this mortgage.
So, in the meantime, sorry, go ahead.
Yeah, the down payment is also a part of it.
Oh,
So you need to have at least you're looking at different options available, like 20% down payment, or there is insured products are also available for this.
So pretty much what I understood from Biju is that newcomers who comes doesn't have a credit history, but at least they're here at least 4 to 6 months. If they are able to put 20% or more down payment, then credit history pretty much you have some special schemes or programs for those kind
Available
of
for-
people,
yeah.
even though they don't have a credit history.
Exactly.
So yeah, so those who are
So
watching,
together with that, if you look into, there is most of the new immigrants coming to Canada, especially on the work permit, also they are professionals,
oh, okay,
like doctors or engineers or those kind of people. We do have certain mortgage products available for the professionals, like doctors and the medical professionals, as well as for the engineers, those kind of people. So we do have a special mortgage plan and programs available. So that is one of the advantage. It depends on what kind of category you are working. So maybe you are a dentist in your country, and you are still trying to get your licenses and accreditation over here, equivalency and all. During that time, you will be eligible to acquire a mortgage and live comfortably at your own home. That's a dream home. That is,
oh.
that is possible.
Oh, interesting. Yeah. So, any of these people who is watching this video and they are newcomers, Scotiabank has a very nice scheme for newcomers who are still started building their credit history. So, either please reach out to Biju, or if you have some hard time, please reach out to me. I can definitely pass his number to you. So that will be a great help for you to dream your own home. Now, I'm coming
Maybe
to.
I will add one more thing onto that. Um, you don't have to, be nervous to approach me because, oh, I'm not going to buy a property now or in 1 month's time. Otherwise, why should I reach out to him? No, you approach me for your questions, whatever your doubts. I will be happy to take care of your questions and your, the plannings I can provide you, because I was in this industry as a financial planner as well. So I will be able to help you with your how to start with the financial planning for acquiring a property, maybe in 6 months' time or 1 year down the time. So how to save the money, what all options available as a first-time home buyer. You do have a FHSA program, first-time home buyer savings account, RRSP programs are available. So I will be happy to take my time and spend time together with you to give you a financial literacy to how to establish the credit here in Canada, as well as how to save money for your down payment, and what all options are available for you in the near future when you want to acquire a property, when you are ready, maybe in 1 year's time. But feel free to reach out to me, and I won't charge for that or anything like that. That will be absolutely free of charge. I will be happy to meet at your convenience, or in my office, or at your place, wherever you want. I will be happy to help you with that.
Yeah, that's good. So I'll be leaving his number as well on the description, so you'll be able to find his contact details. So now I'm going to ask questions about the investors, um, uh, people who are looking for their second property. So do Scotia have some special lending program for the investors?
There is nothing special program I can think of, but at the same time, like any other bank, Scotiabank also do have the options available for the second home or the investment properties like that. That depends on credit and down payment also. Those factors are calculated. So if you are buying a property especially for the rental purposes, there will be a different calculation available. Underwriting criterias are maybe a little different, so more stricter underwriting plannings is applied to this kind of mortgages. Depends, basically some people are go beyond their means. They want to buy more property, and they are thinking that, okay, I can get rental income from the market. What will happen if the rental market goes down?
Sorry, I have a question in between. So how much is the rental offset by Scotia?
That is depends on the situation.
Okay.
So it can vary from 52. There is an exception. Sometimes can be available up to 80% also.
If it is a legal secondary suit,
Yeah.
then
So that again depends on the criteria of the application. That also we consider the credit score and his financial situation and his past history, and everything will be applicable.
but we
So
can go up to 80.
It can go from 50 to 80%.
80%.
also.
Okay, perfect. Yeah.
But the main problem what we are facing at this moment is rental market is kind of going down.
Okay.
So maybe currently you signed a lease agreement with $3,000 for an upper level 3-bedroom house or 4-bedroom house, but when you renew that lease agreement, you may not be able to get that same rental amount what you are getting at this moment. So we have to take into that consideration the forecasting of the rental market, how it's going. So that is also make an impact on the calculation. So that's why I mentioned underwriting criterias are stricter on the investment properties or second property like a rental property or something like that.
Yeah, just one funny question I would like to ask. But before that, I would like to clarify what is rental offset. What the term means is that, say, for example, if the market rent that you can get for your property, either from your main level or from your basement, or the whole house has how much is the rental that you can get. So bank will take 80% of that value. So say for
Up to 80%.
up to 80%. So say for example, when you submit a mortgage application and when they do a rental comparison, and the rental company comes back with a $2,000 rent for your main level or for your whole house, whatever it may be, bank will take 80% of that rental income. So that is what called the term rental offset. So yeah, I just thought that I will just shed some lights on that term as
But
well.
there is few factors included in that. What is the property tax you are paying? What is the utility?
Okay,
All
okay.
these
Oh.
factors are also considered into the rental.
Oh, rental offset. Okay,
Yeah.
got it. Okay, now I'm coming to the funny question. How many properties, how many properties that a person can own without on the on the on the eyes of Fed or the CRA guys?
So previously, many years ago, like the time when I came to Canada, maybe 20 years ago, a person can go up to whatever the number of houses they can buy or purchase and own it. But there is the new rules are applied. by Government of Canada, and the CRA regulations are applied onto that. But anytime currently there is because of the strict measures, the rulings, the new regulations are there. So there is a restriction from the bank itself. What is the maximum you can go? But again, that is all based on your income, your job situation, your profession, your cash flow availability, and all those factors will be considered. Because just as I told you, some people think, okay, I'll buy 5 different rental properties and I will run the business my own. So what happens if the rent in the market goes down? So their mortgage payment, monthly mortgage commitment is, justifying with the rent income what they are receiving. So that's why there is stricter rules are available. So when you look into the regulatory informations, you will be able to see, but that little bit varies here and there. I don't want to give a specific numbers. Okay, you can go for 3 houses or 4 houses, but there is a regulations are in place, but depends on the situation of a person to person. It can little bit vary here and there.
So now, Biju, I would like to ask another question. People always talk about, oh, there should be a perfect scenario for someone to get a mortgage approved in terms of credit or their financial positions or down payment. So there is a perfect world for buyers can qualify a mortgage, or there will be some kind of leniencies, or can you elaborate a bit on that one, especially on the credit score?
Of course, there is multiple factors are considered for a mortgage approval. So which comes with, of course, the first and important thing is the credit score. Second thing is the loan to value of the mortgage, what you are looking for. Third thing is your TDSR, we call total debt ratios, service ratio, and gross debt service ratio, because most of the clients may not be able to understand this terms TDSR or GDSR, but these are the few important points anytime the lenders as well as underwriters look into. Of course, there is different flags also we look into. The income documents and the income stability, we call it at 5 C's of credit, is very important in the lending world. So they look into all these options like capacity, your credit, and your, how you can repay this, what is the source, and all those credit history and everything will be there. Ideal credit score is always 680 plus. But in some cases, there is some exceptions available, the lower credit score between 620 to above. So there is some cases. In those kind of cases, we require to have some compensating factors like a strong co-borrower with one who having a good credit score, or there is good income available. There is various factors. Sometimes even though the person or the borrower may have very good income, but because of something went wrong in the past, their credit score maybe got affected. So there is a solution available for that. There is exceptions available for that. So that's why we look into different options available. There is a compensating factors available to review the credit score and mitigate the flags, which is there as credit bureau score. As well as every bank have something called a BNS score, that is internal scoring, how that determines your bankruptcy level, or how, based on your revolving credit facilities utilization, credit card utilizations. Like anytime if somebody uses $10,000 credit card, and if they use 9,500, that is 95% of the credit utilization. So that is one of the important factor to look into. So it's always ideal to keep your credit score limit, credit card limit around 50%.
Okay.
So let's say if you have only one credit card and you are spending everything through that credit card, but make sure it should be always below 50% or within 50%, or you get another one more credit card and split your expenses into that. So that's the way you compensate. Line of credit is also the same thing. Utilization ratio you have to look into. So these are some major factors. As I told you, ideal TDSR is around 44%. That is basically your total income is around 44% of the income should be, we are calculating for all your revolving credit and your loan debt payment. That is excluding your insurance and everything, which should be within that 44% limit. So, example, if you are buying a house, your mortgage payment, let's say $2,000, the $2,000 monthly payment plus your whatever you call it, property tax and the
Heating cost.
utility and everything, or any credit card balance outstanding or car loan, it should be within that 44% of your total
Spendings, yeah.
monthly income.
Oh,
So
okay.
that's what you need to consider.
Okay. Another question that I would like to ask, like we have seen these two terms like regularly. So what is the difference between a pre-qualification and a pre-approval? Or it's same?
Pre-qualification is or pre-approval is, both are almost same thing. When you go to bank nowadays, most of the bank don't even entertain the pre-approval.
Oh,
But in certain cases, of course, yes, they do. And as a person, I will do that, because some of the people, when they are looking for a builder's property, construction mortgage, so they need to have, the builders required to have a pre-approval without any conditions. So we do that. So it is basically, we are running application with the certain conditions. So if everything is okay, these factors are not changed, your mortgage is secured. So there is a term, there is a number of days available for that validity. And again, at the time of the mortgage finalization, they will look into that. Is all the factors which we mentioned are still the same, or there is any changes happen? If the job got changed, or your income got changed, or any milestones in your life, like new baby born, or lost the job or something, all those factors considers on the pre-approval as well.
yeah, I have two more questions. So the first, like the second last question. So if someone is going to buy a brand new property, what is a maximum rate guarantee that you can hold for that particular customer, as well as the approval? Like how many months or how many days that you can hold that?
Most of the time, commonly around 120 days rate guarantee, but in exception, some cases it can go up to 180 also. There is an exceptions. But if there is some delay happened, if the client coming back to us and saying that, okay, there is delay happened on the construction or whatever, so we do have to go back to the underwriter and ask for an exception to extend that. So there is flexibilities are there on that.
Okay, so maximum up to 180 days. So that means if you sign up with a builder, up to 6 months, they can secure the rates as well as the approval without going for another
Exception.
exception or an approval process.
Yeah.
Okay, so they will be safe during the period.
Yeah.
Okay. So the last question on this session: what is the difference between the high ratio and the conventional mortgage?
Okay. Anytime when it comes to a mortgage world, there is two factors are there. One is called high ratio mortgage. High ratio mortgages are always an insured mortgages. We know there is CMHC, Sagan, and Canada Guarantee are the three insurance companies. This mortgage will be insured. That means you are paying lesser than 20% of the property value, loan to value. That is, anytime if it is lesser than 20%, that is a high ratio mortgage. So in high ratio mortgage, there is an insurance portion is need to be applied onto that, based on you're putting 5%, but minimum is 5%. So it's a 5% or 10% or 15%, the insurance ratio will change. So that will be added onto the mortgage. So that is called high ratio mortgage. At the same time, conventional mortgage is 80% loan to value or lesser is a conventional mortgage. So there is a little bit rate differences are also there, because conventional mortgage don't have any insurance guarantee of foreclosure or any kind of risk attached to that. That's why the rate may be a little bit different than the high ratio rate. So high ratio rate is given because there is a support from the external insurance company like CMHC or Sagan or Canada Guarantee. So that's why bank is safe in case if client reach into a special situation So if they are not able to pay or something like that. But at the same time, together with this, I want to bring a couple more points for any borrower. It's always advisable to take consideration of some insurance product, that is other insurances called mortgage insurances, like life, job loss insurance, and disability or critical illness. All those kind of insurances are always advisable, recommendable, but that is not mandatory when you go for a mortgage.
Oh, okay.
But that is a peace of mind. Let's say once you took this mortgage, you are moved on to new house. The job market is very volatile at this moment. So if you lost the job, what will happen? So there is someone to help you with your monthly payment. So that's why the job loss insurance comes into the picture. And disability insurance, especially Calgary, it's a very winter kind of place. Always ice and snow in the roads and everything. If you fell or broken your leg, you cannot go to work. You are disabled for some time. So there will be a coverage protection. So that is also important to look into that.
So what is the if you can answer, but of course I know you will give better rates than this. So what is your 5-year fixed at this point?
The current 5-year fixed rate, I think it's if I'm not wrong, it's between 4.6 to 4.9 at this moment. But
Okay.
the rates are frequently changing. So there is options for looking to better rate negotiation.
And one more question. Sorry, I'm keeping this session more and more, but it is getting more interested. And these questions, I'm asking on behalf of my customers. So always my customers ask, "Oh, Renju, is it best to go with a fixed or with variable?" So what will be your advice? I know it will be very hard, Biju, to answer this question, but because this kind of really uncertain, which one is best, fixed or variable?
I will say both. The reason, if a person with a peace of mind he is looking for, he want to have a fixed payment to go, because he knows that for next 5 years my mortgage payment is going to be $2,000. So those kind of people, they don't want to see a variations on their rate or monthly payment. It's better option is fixed rate. But most of the people, especially on the lending side or the financial advisors, as a person, I prefer variable rate because the market fluctuates, you get the benefit of it. If the prime rate goes down, you get the benefit of it. Of course, many of the financial institutions have an option. If the rate goes up, you do have an option to lock it, the fixed rate. Again, when you look into the big picture, when you look into the amortization period month by month, you will be paying more towards your principal if you do have a variable rate mortgage.
Oh, okay. Got it.
But in the fix, first you will be paying more towards the interest portion, the less to the principals. But in the variable side, it is more into principals and less into interest. So that is the advantages. But there is pros and cons in both cases, but depends on the person's comfortability. We can make a plan.
Okay. Yeah. So thank you so much for watching this video, and I would like to thank Biju as well. But we'll be doing one more session that will go more deeper questions, and we really want to get those answers from Biju. That will definitely help you in going forward your home buying process. But please reach out to me or Biju if you have any questions and any clarifications needed on these general scenarios and how it goes. But thank you so much, Biju.
Thank you, Riju. Thank you for this opportunity. And as I mentioned earlier, I'll be available to for any of your questions or any clarification, any doubts you want to ask. You can reach to me at 403-612-9397. Of course, I will be looking forward for further discussions like this to support our people in Calgary or in Alberta or across Canada. So this is my privilege for having this time with you, and thank you. Thank you very much.
Oh, thank you. Yeah, bye.